joining us. I want to start with something which is like the talk of the town. I don't know whether this is like the flavor of the moment or this is a long-term trend, and that's the reason why perhaps our viewers need your view and your guidance. There is a huge comeback in railways and railway stocks. And let me share the market view with you. The general view with markets is that the capex in road is over, defense is something which is visible, and now the next thrust area by the government, by the central government to push the capex would be done by Indian Railways. Is there merit in thinking in those lines?
There is indeed. From the anecdotal evidence I have from friends who are in the business of supplying goods to the railways and those who are EPC contractors, there is a resurgence in the order book across different sectors, largely railway electrification, new lines, miscellaneous, shall we say, capexes to renovate existing capex, like overbridges, etc., etc. So there is a resurgence in railway capex, including the continuing work on western and dedicated freight corridors, the work on the bullet train. So a whole lot of things are coming together, and the most important point is why there is a resurgence in stocks is that railways today is considered a good paymaster. The anecdotal evidence is that payments are coming on time. So I think what you're hearing from the market is correct. And the other trends that roads, I think, has seen a seasonal dip and is down to about 20 kilometers from a high per day, from a high of 37, 38. But it will come back because there are very many major projects under execution. There are issues with the debt ceiling in NHAI, which is leading to some slowdown. It will continue to be stable, but railways is certainly the active sector. But back to you.
Government has to kickstart the capex in railways. Could it be a combination of what is happening in defense, where business by nomination is going to, a sensitive business is going to, let's say, HAL, BEL, and the other government companies like Kochi Shipyard and Mazgaon Shipyard, but there is a new industry which is getting created. Mahindras are getting orders, Bharat Forge is getting orders, smallest machinery, smaller defense companies are getting orders. Do you see the same flywheel effect, if I may use the word terminology, flywheel effect getting created?
You mean in railways?
Railways, yes, sir.
Yes, that effect is getting created across. See, remember, India has 23 urban metro projects, right? Each of those projects are either nearing completion or getting into expansion of new lines and ordering new bogies, new trains. Similarly, is happening with Vande Bharat. Every day you hear about 20 new connectivity points for the Vande Bharat trains. So all of these require equipment suppliers to supply different elements of the capex mix. And that's only about trains. Over and above that, as I said, there is electrification to complete. There are new lines being built in Northeast, in the North, different parts of the country. There is rejuvenation of existing capex. There is Eastern and Western dedicated freight corridors. So all of this is adding up. So government is kickstarting, the phrases that you used, the flywheel effect, etc., is in play. Very much. Your observation is bang on.
The railway ecosystem as well is so large, right? I mean, there are companies who are making wagons, there are companies which are into freight, there are companies like IRCTC, for instance. For an investor, it's a bit of a tough call as to what to go by with.
Not really, because investors come in different slices of the action. The interest of the EPC contractor community is different from those supplying bogies and wagons. They're a separate crowd. Those in the electrification of railways is a small crowd. So for the corporate sector, it's not particularly confusing because each set of players has their own defined niche. And within that niche, they seem to be pretty happy right now.
Chatterjee, hi there, good morning. What is the outlook in terms of the kind of thrust that the government has taken, really? Because there have been a lot of reform initiatives in order to transform the sector into a future-ready rail system. You were talking about electrification, etc. There's a lot of thrust on tech as well, aiding this growth. Has enough been done on this front, and how do you see this moving?
I presume your question is beyond railways, am I right?
Now, in particular for the railway sector as well, if you would like to speak about others, it would be fine. But just the future-ready rail system by 2030, that's what I was referring to.
Well, future ready rail system, as I said, is coming in different parts. It is coming in a rather dramatic shift in the logistics focus, as per the new logistics focus, so far as railways is concerned, because the logistics plan, the national logistics plan mandates railways to raise their share of freight from 28% to 40%. And to that extent, the railways have set up a brains trust or a task force, and they are very seriously attacking the proposition through a combination of increasing speeds. The average speed right now is on 28 kilometers per hour for freight movement, and they want to raise that to 50 or 60. They want to reduce the freight charges by 30% for a group of key commodities. So increased speed, reduction in charges to compete with the road sector, a huge focus on multimodalism. All of this and the commencement of traffic on eastern and western dedicated freight corridors, use of specialized wagons, all of these should lead to a resurgence of income on the freight side. On the passenger side, the story is well known. Between the bullet train that should be ready in about 2.5 years' time, after all the land issues have been happily sorted out in Maharashtra, and a series of Vande Bharat trains coming, and major thrust, you should see, I mean, across the Indian subcontinent, the sheer quality of facelift and renovation of the stations is dramatic. So from stations to freight to passenger services, there is a very strong resurgence in railways, to use your phrase, being future ready. That's visible, very clearly visible, on the ground.
So when it comes to some of these railway companies across the board, do you think that we are likely to see better operating performance, largely on account of some of the factors that you flagged off, the ramp up in capacity utilization, better absorption of fixed costs, etc.?
Well, yes, I am not a person that tracks stocks, but if there is a resurgence in a sector, I suppose all players that are listed in that sector and have stocks should be attractive for the investor.
Good morning, Mr. Chatterjee. I am who you call the wrong Naintara, right? His daughter is also called Naintara, so I'm saved on his phone as the wrong one. Good to have you on the show. I know we talked to you about railways and defense, but there's been another big move that we've seen in recent times. And, you've been talking about this. You've been talking to the government about this. Green bonds. How can that help in the infrastructure story? Right now, it's going to be for the government undertakings. We're waiting to see if the private sector can participate.
See, right now, this is part of the implementation of the FM's budget speech last year, where she promised the introduction of green bonds, and that, I believe, the framework is almost ready for launch. It is 15 to 16,000 crores of bonds that will be raised, and for level one, I mean, for the first stage, it is only going to be used across 9 or 10 green investment options by public sector undertakings. And I think that's a good step to test the waters, to see what the performance of investors are, sort out any other glitches with relation to fine-tuning of interest rates, of any tax concessions, etc., etc. So that's what we're looking forward to now, and that's all I know in terms of the government being, shall we say, almost ready to issue green bonds. But yes, your point is correct, that in stage 2, we hope that the stage 2 or the tranche 2 of green bonds will be made applicable to green private sector projects also.
Vinayak, let's understand the funding. Now, for railways or metro, the funding has a lot of sources. One, it comes through grants, then it comes through World Bank, then there are agencies who are coming through nomination, and then there is a capex of central railways, which comes by the government. Where do you see the large part of fundraising will happen?
Look, let's separate this into debt and equity. So far as the equity is concerned, it's not, metros don't fall under Indian Railways. So the 50% funding comes from the urban ministry and 50% comes from the states. So it's a 50-50, broadly it's a 50-50 partnership between the central government and the states. Now, having got the baseline equity in place, the question is long-term loans. As you rightly said, they're largely coming in from the Indian institutional funding institutions. The latest one will obviously be NABFID, the National Bank for Financing Infrastructure Development. It would come in possibly from LIC and various others. it would, and certainly from the multilateral bilateral system, JICA, ADB, World Bank, similar such, shall we say, bilateral and multilateral institutions. So that's the broad structure of the metro funding.
Uh, we've spoken about various subsectors within infrastructure where you've been calling out the trends. I remember a couple of years ago it was road. Then we spoke about specifically about irrigation. There was a time we specifically spoke about electricity reforms. So for 3 year out, if you have to pick a subsector where you think the nuts and the bolts are in place, intention is in the place, policy framework is in the place, what would be that big call out sector according to you?
Look, the sectors that are showing promise, don't write off roads, because it is going to be an ongoing project for the next 10, 15 years, because historically you have seen expansion of existing alignments. Today you are seeing a resurgence of new greenfield alignments. So a new market is being created for the roads. So roads, railways, renewables is what I put my money on right now, because all these three segments are showing huge growth. I would halt on electricity distribution because we have not seen the kind of aggressive policy push that was expected 2 years ago. There seems to be a wait and watch because of very strong backlash from the unions in the states. So I wouldn't be too bullish just now on electricity distribution. And that's, so far as the other sectors are concerned, there is a big thrust on Nal Se Jal, the Jal Jeevan mission. And that is a good sector for people who are suppliers of anything to do with water supply, drinking water supply, I mean, not irrigation. You know, pumps, valves, pipes, taps, pressure pumps, meters, all of that will see a big upsurge in it. So that's really my broad call.
Vinayak, so great to have you on the show. Thanks as always for taking the time out.
Thank you. Thank you. Been a pleasure.